Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. That is Mahima Vajrajani. I'm Alex Matthew, and we'll take you through the next 1 hour of trade. Morning, Mahima.
Morning, Alex.
Let's take a look at where the markets are right now. And it's more of the same. We saw quite a bit of chop and churn yesterday, and we are at the low point of the day today. A significant amount of selling coming in just over the last 15 to 20 minutes or so, and you have the Nifty 50 with cuts of about 1% right now, down about 250 points or thereabouts. The broader markets, let's take a look at where they are. They've also given up quite a bit of ground in the recent past. In fact, just in that same time frame, you've had a drop of about 0.2% or thereabouts for the mid-cap index. Similar cuts for the small-cap index. Yesterday in trade, you saw a little bit more strength in the broader markets. That continues to be the case today. Of course, let's also see how the advanced decline ratio has moved, because one would assume that it has widened in just this time frame that we've been seeing those declines. So it has broadened quite considerably, significantly more. In fact, 2 declines for every gainer on in the markets right now. Take a look at the sectoral picture, because that's really going to tell you where the pain points are right now. And as I look at the screen, you have declines for the energy space, you have the banking pack under pressure. In fact, the Nifty Bank currently with cuts of about 1% or so. And you also have oil and gas PSU banks that are under pressure in trade today. Something like an FMCG index, metal counters losing ground, building on the declines that you saw in yesterday's session as well, on account of the lack of news that is coming through from China and the weak data that has come through also yesterday. What is standing out? Realty index is doing particularly well in trade today, up about 1% or so. I'm also very quickly going to take a look at the Nifty 50 contributors in terms of the sectors that are doing well. Only the services sector is more or less adding a little bit of ground, but everything from the likes of financial services to oil and gas to IT, FMCG, everything is down at this juncture. As we look at the screen right now, heavyweights leading to quite a bit of the declines, as much as 65 points being contributed just by HDFC and Reliance Industries. Mahima?
Right, absolutely. But there are some counters, that are kind of bucking the trend. 2 of which, are seeing significant gains on the back of initiation of coverage by various brokerages. The first one is Piramal Pharma, where JM Financial has initiated a coverage with a target price of 340, and the stock is seeing gains of around 5% Quest Corp is another counter which is seeing gains, where Antique Broking has initiated coverage with a target price of 1000 for this counter. It's currently trading at 731 and up 9% as we speak. Some counters that are buzzing on the back of QIP, Gravita India is one of them. The board has the QIP starts today, and the QIP is set for around 2,206 per piece. This is the floor price set. The stock is doing very well in trade today, up around 6% as we speak. Some other counters buzzing on the back of QIP is HCC. There is also Kelton Tech Solutions, which is set to consider QIP, so that is also in focus. And Mankind Pharma has approved a 3,000 crore QIP, which is also in focus. And all of these QIPs, Alex, the reason and object for issue is basically prepayment or repayment of their borrowings. So all of these counters kind of bucking the trend. Mankind Pharma is currently at almost at its day's lows, but it did see some highs, in the start of the market.
Fantastic. All right. Let's get in our experts of the day. We've got Asa Jain, who's a senior research analyst at HAM Securities, and we've got Swati Hotkar, who's AVP Technical Research at Nirmal Bang. Swati, I'm just coming to you first. What do you make of the last 20 minutes or so? We've seen quite a bit of a crack, if you can call it that. We're at the low point of the day for the benchmarks, even the broader markets losing ground. What are you seeing?
Yeah, good morning, Alex and all the panelists. As of now, Nifty is under nearby the support levels provided by its 50 days moving average, which comes to nearby 24,380. If Nifty respect that level, then we are likely to witness some sort of a bounce back rally. But I believe if you look towards the market breadth, it's totally weak. Only the two stocks are really doing very well from the Nifty 50, that is Cipla and Adani. But as of now, the view is a bit cautious. I believe one side, on a downside, we can see the extension of this fall towards to 24,200 to 24,000 level psychological mark. Up to that level, we are likely to witness a selling pressures. Positive momentum can be seen only the Nifty manages to give the breakout of 24,800 levels on the closing basis. As long as it sustains below that level, the view will remain cautious on the market. So one should stay light on the long positions. Try to book your profits on every rise, or at least hold your long positions by keeping a strict stop losses. That is the view actually we are giving to our clients.
Right. Moving on to the queries for the day. The first query is from Sai Kumar. He's holding 2,100 shares of Monarch Capital, bought at 480 rupees a piece. Should he keep holding it or sell it? His time period is 1 year. So, Swati, I'll stick with you for this one. How does it look on charts?
Yeah, as of now, the stock is under the consolidation phase. It's trading within the range of 400 to 450 levels from the last 3 months trading sessions. If it keeps the breakout, then only we can see some sort of a positive momentum towards to 480 to 500 levels. So as of now, it is under the no trading zone. I will suggest to hold on your long position since you are looking for a longer term horizon. I'm putting a target of 500 levels. Downside, it has a very crucial support at around 420, 410 levels. So by maintaining that stop loss, you can definitely hold your long positions for immediate target of 500. Beyond that level, 540 levels can be seen.
Okay, we've got our first caller for the day. Shweta is calling us from Hyderabad. Shweta, good morning to you. Thanks so much for calling. How can we help you today?
Hi Alex. Good morning.
Good morning.
My question is regarding RK Forging.
Okay.
I'm holding 106 shares of RK Forging. And I want to know the 6 months outlook of this share.
Oh, did you just buy it because the stock price?
Hold it, or should I shift to any other same?
Okay, just
share?
6 months?
Yeah, 6 months to 1 year is okay.
Okay, and did you just buy it considering that the share price is very close to the current market price?
No. Actually, I bought it 3 months back.
Okay, and you bought it for the short term itself, right? It was a trading strategy.
Yeah. My view is only below 1 year. So.
Understood. Got it. Let me go across to Swati on the charts just to give you some perspective on the relatively shorter term prospects for this counter. At exactly the buy price is exactly where the market is at right now, Swati. What is the prospect for the next 6 to 12 months?
The overall sector as of now, it's not performing really very well as such. If we are look towards the specific RK Forging stock on the monthly chart, it is just trading in a sideways momentum. No wonder we are hitting some sort of a profit bookies because the counter has already given a very good rally in the previous last 4 to 6 months backs. Now downside, I believe that yes, selling pressure is likely to be continued. Probably it will test the previous lows of 860 to 870 levels. Up to that level, we can hit the selling pressure. And there onwards, we can see some sort of a reversal. So at the current levels, the view will be little bit cautious. But if you're looking for a longer term horizon, definitely this counter looks good. So on every dips towards to 850 or 860 level, you can average it out. On a larger degree for say 6 months to 1 year, I'm looking for a target. Immediate target will be 1,000. Beyond that level, 12,000s can be seen on the high side.
All right, Shweta, I hope that answers your query. The next question is from Sahil Jadhav, who's from Pune, and he's written, Alex, you're a brilliant anchor. So,
thanks so much.
Yeah, compliments for you. His question is basically on PG Electroplast. He owns around 2,700 shares odd, bought at 609 a piece, and he wants to know as to, should he accumulate more considering a small correction at any point of time now, and his time frame is 5 years. So Astha, since the time frame is 5 years, I just want to understand whether does it make sense to wait for a small correction or should he just invest right away? And Astha, first of all, sorry for keeping you waiting.
That's perfectly fine. Hi, good morning to all of you. So talking about this counter, as we all know, I mean, it's a decades-old company. I think maybe it has a experience of more than 2-3 decades. And this company's main focus is in the room air conditioners, etc. They have got a main office in Greater Noida. Now, talking about the financial performance was excellent. In fact, I think going ahead also, the kind of orders the company is getting, that will definitely pave the way for more upside momentum in the counter. So if there is a longer term horizon, I think there is no need to book profit at current juncture. Maybe above 1,000 levels, there will be a good level to book profit in. So as of now, it's a hold from my side, and the target which I would like to recommend to this counter is at around 1100 at present moment of a time. So my idea here is to stay invested in the counter.
Yeah, not too far, and what a run it's had over the last 12 months or so. Absolutely incredible. Probably the stock of the year. We'll know soon enough. We'll be compiling our list of the best stocks of 2024 very soon. Russell's got the next question. He's asking about Tata Motors, which he's bought at a level of 935. He's got a considerable shareholding of 1,560 shares. Does he lower his average cost at this juncture? Does he sell or does he hold? Because he's undergoing quite a bit of a loss at this point. It is reflective of what you've been seeing on the global stage, problems that Jaguar Land Rover has been facing, but some part of that has been unwound in the second quarter. Would you agree with that, Astha? Margins have improved, cash generation has improved for Jaguar Land Rover, but not completely out of the woods yet. Would you suggest holding on to Tata Motors?
I think despite all the challenges which JLR is facing, I think the new product launches will definitely help the company to gain the momentum. So this is the first point which I would like to say. Yes, JLR is facing certain challenges, but I think the new product launches will definitely gain the momentum. And in fact, they are working good in the CV segment also. So I think if we talk about the CV segment also, CV segment is also looking strong to us, and that will be going to continue perform better, because now we are seeing in the H2 of FY25 the government pushes there for more infrastructure led expansion, so that will also help the company. So I think in both the segments this company is well poised to now show the good, strong or future financial performance. So it's better to remain invested in the counter rather than booking losses. These are the stories which are just for the longer term, not for the shorter term. Stay invested in the counter. Definitely cost price will come of around 935 for this investor, and we are expecting right now the counter to move till those levels only. So my idea here is to hold the counter.
It's a hold for Tata Motors from Astha. We have our next caller, Chandan from Mysuru, is calling us. Chandan, thanks for calling in. How can we help you?
Hello, ma'am.
Hello.
Hello, ma'am. I bought a Mastek share.
Okay.
Mastek is 50 quantity at the price of 2,800.
Okay.
2 months ago.
Okay.
Now it is currently trading at 3,200 change.
Okay.
By looking at the quarterly result of September, I bought this one, the Muthoot targets. Now, madam, what will be the short-term target and long-term target? Till what price I can hold this share?
All right. You bought it from a fundamental perspective, I believe, because you saw the results and you
Yes,
bought the
yes,
stock, right? And
yes.
all right. So you want to know if long-term, till what time period are you ready to hold the shares?
Yes. As well as short-term target also, nearest target.
All right. Okay. Asa, I'll come to you first. Your view on Mastek?
So Mastek is looking positive to us. Definitely a hold is a recommendation from our side. Now I tell you why it is a good long-term story, at least for coming 2 quarters, because the company has taken the wage hike in Q2. And despite that wage hike also, we have seen the company has performed very strongly on the financial front. So I think now the coming 2 quarters will definitely going to be strong on the margin perspective, because the wage hike they've already taken in quarter 2. So there will be no impact of that. Along with that, there is a strong order backlog for this company. And on those bases, we are expecting the sales and profit CAGR to be at around more than 12% for this company. So all in all, it is still looking decent counter to us. My idea here is to remain invested. I'm giving long-term price target, and long-term we are expecting this quarter to move till the level of 3,400 to 35.
Right, 3,400 to 3,500 levels is the target given by Astha, so keep holding that. But quickly, Swati, on the charts, how does this look?
It's really a very good counter on the technical front because the stock is on the verge of giving the breakout of 2022 levels, which comes to nearby 3400 levels. Once it gives the breakout at level, then 3600 is definitely likely to hit very soon, probably within the span of this month itself. Beyond that level, 4200, 4400 are the likely targets for an year, and so I'm looking forward. So the chart is looking very positive. You can hold on your long positions if you're planning to keep any profit stop losses. 3150 is the very crucial level, support levels. So by maintaining that stop loss, you can hold on your long positions for immediate target of 3600, and beyond that 4400 levels can be seen.
Positive view on the charts for Mastek. It's actually a positive call both on the fundamentals and the technicals. Hopefully that answers your question, Chandan. And congratulations on having acquired it when you did acquire it. We've got an interesting question coming from Mr. V. Ekambaraya, who's writing in from Hyderabad. And it's a strategic call that he seems to be wanting to take. And this one's a question for you, Swati, because he's got Astral Limited, which he's bought at a price of 1,800. The stock price is currently at about 1,850. So he's making a small profit. He's asking if we should book out that and put money into Reliance Industries, considering the kind of declines that we've seen over the past 1.5 to 2 months, or actually 3 months.
Yes, as of that, Astral also really looks good at the current market price. Actually, we have seen a very sharp correction from 2500 levels to 1600. Now, the overall momentum indicator shows a positive indication on the daily as well as on the weekly charts. I believe the stock is likely to witness a very good bounce back rally towards to up to 2000 or so levels. So, at the current level, I will suggest to hold on, try to maintain your long positions because it's not used to exit the long positions nearby the current market price. 1800 is the immediate support level. So by maintaining that stop loss, you can hold on the long position. Probably within a span of 2 to 3 weeks, you can see the upside momentum towards 2000 levels. Definitely, Reliance looks very, after such kind of a correction, one should definitely grab an opportunity to take a long positions for longer term horizons. But I believe one should hold on for a time being, let this particular counter find a support nearby 1200 and so level, because the market is not really doing very well. It's one of the Nifty 50 counters. So we are likely to witness more hit into this particular stock. So if you are getting any tips towards to 1220 or 1200 levels, definitely you can buy the Reliance at that particular levels. Higher side, if we are likely to witness a bounce back rally for a shorter term period purpose, as such 1300 to 1350 levels can be seen. So both these stocks are really doing very well. For a longer term horizon, you can hold the Astral, but on the Reliance, wait for a time being, let the stock find out a support nearby 1200 and so level, then you can take an opportunity to take a buy call on FD dips.
All right, so for Reliance, wait for a support zone is what Swati is indicating, and Astral you can keep holding. Moving on, the next query is from Jose, who's from Bangalore. Now, he's bought 13 shares of Indigo, bought at 4,000.55 apiece about 2 weeks ago, and he's saying that he's sitting on around 11% odd profits. Should he keep holding it or sell? Swati, I believe that he wants a short-term view on this, so your view as to how Interglobe Aviation looks on chart.
The chart is really doing very well. It's trading important moving averages. Say if you look towards the short-term moving average as well, it's well placed above the 20 days moving average, trading in the pattern of the higher tops and higher bottom formation. So the overall setup is really positive, not showing any sign of a major reversal for the downside. But I would like to give a profit stop loss on a downside, that is 43.80. By maintaining that stop loss, profit stop loss, you can hold on your long positions. If you're getting any momentum, positive momentum towards to 4500 or 4540, at that level, you can definitely book your profit. So at the current level, it's a hold by maintaining the strict stop loss.
Okay, all right. So that's the view on Interglobe Aviation. It's up quite a bit, 50% plus. It's a hold from the perspective of the technicals. Let's talk about the next question. In fact, we've got a caller from Hyderabad. Satya is calling us. Good morning, Satya. And you've got a question on Ceat, right?
Yes, sir.
Please go ahead.
Yeah, hi. So currently I was holding Ceat shares of quantity 160.
Okay.
At the price of 3164.
Okay.
So I am a short-term trader.
You're a short-term trader, okay. So, and when did you buy it?
So, on yesterday.
Yesterday, okay. Got it. And how long would you want to hold this for, Satya?
Approximately 2 months.
Sorry, can you repeat that, please?
3 months, actually.
3 months. All right. So let me get you a short-term perspective. Of course, you must be aware of the fundamentals as well about Ceat. We've been covering this over the past couple of weeks. There has been an acquisition of an interesting brand and the stock price did run up quite significantly. However, it has given up. In fact, let's pull up the 1-month chart because that will give you an indication as to how it's moved. It's come off from the high point that was hit soon after that acquisition was announced. Swati, I'll come to you on the charts though. On the technicals, bordered levels of 3,164, what are the prospects on the upside for 3 months?
My view is little bit cautious on this particular counter. Why I'm saying that, because already the counter is showing a negative divergence on the daily charts, which gives a little bit concern as such. But no wonder the stock is trading above the 20 days moving average. But I believe it likely to hit the lower levels of 3,050 and so. So 100 points downfall can be seen in this particular counter. So any rise towards 231.80 or 3,200 levels, I will suggest to exit your long positions. But at the current level, if you want any stop losses, 3120 is the crucial support level. So by maintaining that stop loss, you can hold on to your long positions. Any up move, if we get it, try to exit out in a profits.
Right, so it's a sell call for Ceat from Swati. The next question is on Ramco Systems and this is from Ravi Kumar. He's holding 200 shares bought at 370 a piece and he wants to know whether it is a good counter to keep holding for the next 2 years or not. Astha, I'll come to you for this one. Do you have a view on Ramco Systems?
I think it's a good counter to hold for next 3 years, as the question is. Now, if I talk about the fundamentals of this counter, I think the financial performance which they have posted was not very strong in Q2, because what we have seen that there was a negative bottom line in the Q2 of FY25. But going ahead, what I believe that Ramco System will able to show a strength in their financial performance in the longer term. So just for the longer term perspective, we are on positive on the counter. In the short term, we can see more pain in the this counter. The short term view is not positive, but long term view is positive for this counter, because being an IT company, I think it will be able to show some boost up in the margins in the coming results. So I would really like to see the results, and that's why we are recommending hold on this counter.
Okay. All right, we've got a question. So by the way, it's a hold in case you missed that on Ramco Systems. Hiran Das has got a question from Pune, and Sunteck Realty is the name of the counter that they want to know about. Interesting that the stock is down about 1% when the Realty pack is actually buzzing in trade today, but he's got a long-term perspective that he's seeking, and he's looking at least 2 years. He's bought it at levels of 557, and he's looking at the fundamental view. That's the reason why he has actually bought the stock. So Astha, based on the fundamentals, what are the prospects that you see for Sunteck Realty, and would you hold, is this the best possible pick in the realty space?
Not best possible pick, because we are very much positive on Macrotech developers in the realty space. So first of all, the best pick, if you want to ask me that question, then definitely it's a Macrotech developers. But now what about Sunteck Realty? So management has guided for the strong pre-sales, and in fact they have guided for the pre-sales of around 30%. So I think that is very strong. In fact, 19 billion of the new projects are there which are about to launch in H2 of FY25. So again, that is also looking to be a very strong number. So I think on the basis of a strong guidance by the management, along with the good launches, we are positive on the counter. But best pick always remains with Macrotech developers, although we have given the price target of 1,500, which today it achieved. But still, I'm positive on this counter. Next price target for Macrotech developers is 1,550. But for Sunteck Realty also, one can remain invested. Initial price target for Sunteck Realty is around 560 to 570 odd levels.
All right, so Sunteck Realty, the target is around 570 and 1550 for Macrotech developers from Astha. The next query is we have a caller named Narsimba who's calling us from Hyderabad. Narsimba, thanks for calling in. How can we help you?
Hi.
Hi.
Thanks for taking my call. I have Tanla Platforms.
Okay.
Okay, I have bought it 3 years back.
Mm-hmm.
602 rupees each.
Okay.
And 892 shares.
Okay.
So right now I'm standing at 20% loss.
Okay.
I want to understand the fundamentals and if I can hold it for another 5-10 years.
5-10 years. So you're looking. I just want to understand as to what was the thought process behind buying Tanla Platforms.
because this is a software development company, but it is not like any other services company. It has its own products, and it is it provides services like OTP, right? We use for banking and other platforms.
Right.
So this is unique, and also they do spam recognition, spam identification, inbox, all that.
Got it.
So I thought there are not too many players here, one or two.
Got it.
So this should be a good bet.
All right, got it. Right.
So, but it is going down. It's been 20% down for last 3 years.
Right.
I don't know whether it will move up or not. So need to understand.
All right. Asta, I think he's already done his research, but your view on Tanla Platforms?
So I would like to answer one of the query that it is down despite having the strong fundamental, because the results which are posted by the company are not falling in sync with what we were expecting out of it. Now, if I talk about Q2 of FY25 results, there was a degrowth in the bottom line. So definitely, if the results are not going to be positive, definitely markets will never, celebrate those stocks. So that is the major reason. Now, if I talk about the other fundamentals, I think because we all know that it is into the platform services. Now, with the addition of the new client, we believe definitely this company will going to perform strongly in the future. So I believe in the longer term, this counter can perform. However, in the short term, some pain can be seen on the back of not so excited good results. But in the longer term, it can gain the momentum. So my idea here is to stay invested, but please keep a close eye on the results as well. Because again, if the results will not fall in line, I'm talking about Q3 results, then definitely we can see some more negative momentum in the stock prices. But right now, idea here is to stay invested at least till the results come.
I must point out that despite the fact that the stock has underperformed all of this year, and in fact even last year, we've got gains for who just called? Narasimha. Sorry, apologies, I forgot your name for just a minute, and thankfully my team has reminded me. Thanks so much for calling us, and hopefully this helps you. Hold is a recommendation from Asta. Asta, Swati, do stay with us. We have to slip into a very quick break, and we'll take more questions on the other side. Viewers, do stay tuned.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit, a show where we answer all your stock-related queries, whether they're fundamental or technical. You can ask us on call or WhatsApp us on the number that is flashing on your screen. Moving on to the queries, Suraj is asking, he's holding ONGC 115 shares at an average price of 281, and he wants to know whether he should keep holding this for the next 3 years or not, and also whether Reliance Industries is a good buy at this level. Asta, I'll come to you for this one, both of these counters.
So both of these counters are looking good to us. First of all, talking about ONGC, I think their main focus point is the ramp up in the KG98 to basin. So I think that will really help in increasing the volumes for the company. And we are positive on this counter, recommending a hold with a price target of around 280 to 290 odd levels at the initial juncture. Talking about Reliance Industries, in fact, Reliance Industries is also looking good to us because there are other segments. We have seen some tariffs hike, so Reliance Jio is performing good on that basis. In fact, their retail business is also performing strongly. So I think other segments rather than O2C, we are seeing a good momentum in those other segments for Reliance Industries also. So both these counters are looking good to us, and the idea here is to remain invested in both these counters. In fact, new entry can also be made in the Reliance, but at the lower level of around 12.
Right, got it. Let me take the next question. It's a short-term view that is being sought by Arnab, who's writing in from Kolkata, and this is on Tata Steel, which he's bought at a price of 150.75. It was supposed to be a very short-term trade. In fact, it was supposed to be an intraday trade, which he is now converted, and he wants to know the longer-term prospects of this, relatively longer-term. And so therefore, Swati, on a 3-month basis, should he hold on to a Tata Steel, which he's bought at levels of 150.75?
Yes, at least for 3 months, if you're asking me, definitely one should hold on because the stock is on the verge of hitting its oversold zone. So selling pressure will not be majorly seen in the near future. Definitely downside, it has a crucial support at around 138 to 140 levels. That levels may be retested once again, and then we can see some reversal or positive momentum can be seen above 155. If it manages to give the breakout of that level, Alex, then we can see some positive momentum towards at least 172 to 180 levels. So for looking for a 3 months perspective, definitely one should hold on this long position.
3 months perspective, you should keep holding Tata Steel is the view coming in from Swati. We have our next caller, Rajan Iyer from Mumbai is calling us. Rajan, thanks for calling in. How can we help you?
Good morning, madam. I am really thankful that you have given me a chance once again to talk to Alex and yourself.
Thank you so much.
You are conducting excellently.
Thank you so much.
My query is BLS E-Services. I have 125 purchased in January 2024 at an average rate of 220.
Okay.
I am a long-term investor, madam. At least for 3 to 5 years, I would like to wait. Can you just tell me the prospects of it? And I have purchased mainly with the intention of its other company, that is BLS International, which I am having 500 since last 1.5 years. So based on that, I purchased this BLS E-Services. Please guide me. Whether should I hold or should I switch it to something else?
All right, Rajan, your query is crystal clear. I'll go to Astha quickly. Astha, recently listed company. Do you think it's a good counter to keep holding?
Yes, it is a good counter to keep holding. In fact, they have talked about the BLS International Services also, where I would like to highlight this BLS International Services has shown a very strong financial performance of around more than 60% rise in their bottom line. So I think it is a good company to remain invested in. That is BLS E-Services, and the idea here is to hold the counter with a price target of somewhere at around 230 to 240 odd levels.
Okay. Okay, so we've got several questions on WhatsApp. Let me take a couple of them as well. Yes Bank is a counter that we're talking about next, and this is a question from Bhaskar. He's asking, he's bought at levels of 26.5 and he's got a significant quantity, 3,700 shares. He's only looking to hold for the next 6 to 8 months, and he's wondering what the prospects are. Should he book losses and move to something else? Swati, on the charts, how does it look?
Alex, the view is a little bit cautious on this particular counter, but for a short-term period as such, because stock may find a support nearby 18 to 17 levels. Upside, it has a very crucial resistance at around 23 to 24 levels. As long as it sustains below that level, my view will remain a cautious, but for longer-term horizon, definitely you can hold on the long positions, because overall this year was not a good year for this particular stock. We have seen a very sharp correction from the last 2 years. I believe once the Nifty manages to touch the new high, then definitely this counter will likely to participate into this rally up to 30 to 32 levels. For if you're looking for a longer term horizon for say more than a year and so, then you can hold on this particular stock.
All right. The next query is from Deepak. He's writing in for GTL Infra. He has old shares with an average price of 100 and he needs to know whether he should exit, keep holding, and if he exit, what stock could take over in the pipeline industry versus GTL Infra. As I'll come to you on this one, do you have a view on this counter?
Sorry, we don't cover this counter, so I'm not able to provide any view.
All right. Any other stock that you would suggest in the pipeline space?
No, I think we've misunderstood what he's saying. I think what he's saying is there a takeover in the pipeline? Is there something that can take place where this company gets acquired and he can recover some value? Because he's seen a significant erosion of his capital, Asta. 100 rupees has now become 2 rupees. It's a penny stock. I'm not actually familiar with what the company is, and I can't blame you for not having a view either. But in this kind of a situation where you've seen a significant erosion of capital, would you write that off as a loss and move on and invest incrementally?
Basically, this is a telecommunication company as far as I remember, and their financial performance was not very strong as far as I remember. But I don't have more information on this counter. So first of all, I would like to say, please kindly track the results every quarter, because the results will really set a very good picture for the stock performance, at least for coming 2 to 3 months. So because the stock performance was not good, results were not good, so that's why we have seen the stock performance was also not very good. But I don't have more information on this counter, so I cannot provide any other information. I'm really sorry for that.
Deepak, see, I understand he's apologies. So Deepak has clarified that he's just recently retired and he's been out of touch with the markets. Deepak, point well taken, and it's normal to see something like this, but therefore it is important for you to keep a close watch on your stock portfolio if you have made investments into stocks, because it's like owning a business. You would not ignore your business for a period of 1 to 2 years. As much as you say, fill it, shut it, forget it, you must pay attention to what the business is doing. And if the business is not going the way that you foresee or you want it to go, then you need to sell. You need to get out of this counter, especially. Don't wait for the counter to fall all the way up to 2 rupees per share. And in this situation, you have a situation where most fundamental analysts are not going to have coverage on the stock in any case. All right, let's take the next question. I believe we've got a caller. Ravindra is calling us from Mumbai itself. And morning, Ravindra. Thanks so much for calling us. How can we help you?
Yeah, I bought around 50 shares of Voltamp transformers.
Okay.
At 866 average price.
Okay.
And now it is doing good, but it has corrected from 14,000 to 10,000 odd.
Yeah.
800 odd.
Yeah.
So is it to keep it or
to exit? Help me, Ravindra. Yeah, got it. But Ravindra, can you help me? Did you buy it based on the on the share price move, or did you buy it thinking that the transformer space is an interesting space to be in?
Yeah, transformer space. I thought of the transformer space and then bought it.
Okay. Do you have any other counters in the power space, or is this the only company?
I have Tata Power, but at 137 or so.
Understood. And is your intention to hold for the long term? Because ultimately, a lot of people buying into this space are thinking next 5, 7, 10 years. Is that something that you have in mind?
No, I don't mind keeping it for another 5 years or.
Okay. So I'm glad that you've given us some perspective. What you're worried about is the erosion in the price over the last few months, right? A couple of months or so.
Yeah,
all right. That's a fair point. I want to remind you, of course, that this is a stock that has gained quite considerably over the course of the last 1 year. And so a little bit of steam being lost is perfectly normal. But still, I will go across to Asta on the fundamentals here. Asta, I guess if I'm not mistaken, just a couple of months back, if we had spoken about Voltamp, you would have said that you're a little bit cautious, you're a little bit worried about the valuations. Are you still cautious? Are you still worried about the valuations? Would you say that Ravindra should take some money off the table or hold on?
So there are 2 points about it. First of all, I just want to tell Ravindra that why the stock prices has fallen, and this is my analysis, I might be wrong, but first of all, results were not good. Now, why the results were not good? Because due to the conflict in the West Asia, from where they import their major CRGO electrical sheet. So this component they import from there, and due to the conflict there, I think the company faced certain challenges. Secondly, competition has now started intensified in this sector. So in fact, that is also eroding, or that is also giving challenges to the margin for the company. But there is one positive aspect to all this, is that the power demand is continuously rising. And I think it will continue to rise with this 6% CAGR going ahead also. So now if I look at all these factors, club them together, so my idea is there were the reasons that's why stock prices has not performed in the past, but there is a positive aspect to this counter as well, that the demand is still strong. So I think idea here is to remain invested in the counter. I don't think that there is any need to book the profit. Now regarding the valuations, if you continue to give growth in your financial, then you will continue to command high valuations also. This is always a funda for the stock. So I think, yes, valuations are a bit concerning. So if you cannot take the risk, book partial profit, not book full profit. But if you can take the risk, please wait in this counter. I think again it will go till the level of 12,000 to 13,000 at the initial juncture.
The valuations look expensive, but as per Asta, if you can take the risk, keep holding the counter. Well, moving on, Harar from Mumbai has a query on Muthoot Finance. He's holding 300 shares of Muthoot Finance, bought an average price of 945 a piece, and he wants to know, should he add more, hold or sell? Swati, I'll come to you for this one. Your view on this particular counter?
The overall view is definitely positive. The stock is really doing very well, trading in the pattern of the high tops, high bottom formations. Also, the interesting part, upward rising channel. At the current level, the stock is nearby the overbought zone, so we might witness some sort of a profit booking in this particular stock because it's trading nearby the all-time high. So I will suggest to book your partial profits at the current levels, and second partial you can hold on by keeping a strict stop loss of 2,000 levels. Upside levels can be seen again if it breaches that all-time high levels of 2132 levels. Beyond that levels, 2200 levels can be seen. So at the current level, book your partial. Second partial you can hold on by maintaining a 2000 level stop loss.
All right. Well, I hope that answers your question, Pranka. It's a detailed view that has been provided on Muthoot Finance. I would also encourage you to pay attention to the fundamentals on the stock, because there's quite a bit that has been emerging in the gold loan space. Sujata from Bengaluru is asking about NTPC, and incidentally, we've got quite a few people asking about the likes of NTPC, NHPC in the apologies, in the power space. 200 shares of NTPC have been bought by Sujata at a price of 186. It has been losing a bit of ground. Should she hold or sell? What's the view on the charts? Swati, what would you say?
I guess my view is little bit cautious because from the last 2 to 3 months, we are continuously hitting a selling pressure in this particular stock from almost 440 to now it's 350. If you look towards the monthly chart, we are witnessing some sort of a retracement, and I believe this retracement is likely to be continued towards to 300 and so level. So I will try to convey the message that book your profits at the current market price, and you can again revisit or again you can retest the levels. It manages to test the level of 300. At that point of time, you can again re-enter into the long positions, but at the current market price, it's a book your profits should be done at the CMP.
All right, that's the view on NTPC. Moving on, we have our next caller, Prananka from West Bengal is calling us. Thanks for calling in, Prananka. How can we help you?
Good morning, ma'am.
Good morning.
Ma'am, I have Cochin Shipyard
Okay.
at 321 rupees, 210 shares.
Okay.
And Lakshmi Organic. Organic.
Prananka, we take one share at a time. So you can either choose between Cochin Shipyard or Lakshmi Organics.
Cochin Shipyard.
All right. Cochin Shipyard, you said you're holding 210 shares bought at what price?
321.
321. Okay, got it. And the stock is currently trading at 1626. What's your query? What do you want to know?
Ma'am, I want to know that should I book the profit or hold it for a long time?
All right. Since when? Yeah, go ahead. Since when are you holding this counter?
I think 2 years.
All right. So first of all, congratulations because you're sitting on significant profit.
400%.
Yes, absolutely. So 2,74,000. That's not a small amount. So congratulations for that. And I believe you want a longer term perspective, right?
Yes.
Okay. Asa, quickly your view on Cochin Shipyard.
Longer term perspective is looking strong to us on the basis of the capacity expansion. The company will get the maximum orders from the Navy side, and most important point is their order book is 5x of FY25 revenue. So what a strong revenue visibility this counter is showing. I think there is no need to book profit at the current level. Remain invested in the counter. Initial price target can be set at around 1800 to 1900. But I think if these levels come, then again, the investor can, ask his query on this shoe.
No doubt. It's a happy problem to have, wouldn't you agree, Asa, having 400% gains and wondering whether to take money off the table. And that's despite the fact that the stock has come off from the high point of the day. We have to take a bit of a detour on this. Viewers that have asked your questions, do stay tuned with us because there's news coming in on the communication space, in the telecom space. We've got Telecom Minister Jyotiraditya Scindia who has said that satellite spectrum cannot be auctioned on account of technical and operational reasons. To tell you about exactly what he is saying and what the context is, I'm joined by Varun Gakar, my colleague from New Delhi. Varun, what can you tell us about this?
That's right. Hi, thanks. So what basically Mr. Jyotiraditya Scindia is saying that there's a science and there's a distinction behind terrestrial and non-terrestrial networks. So basically what he's saying is that as far as terrestrial networks are concerned, when you're auctioning at a lower frequency, it is much easier to do that from a physics and basically a practical standpoint. So because it is possible because you can allot to an XYZ, a Bharti or Geo, a terrestrial network, and no one else can use that frequency for that matter, apart from a Bharti or a Geo for that matter. And when you get into a satellite spectrum, the LEO space or the MEO, which is the medium Earth orbit and the low Earth orbit spectrum, that spectrum is a shared spectrum, and that at that height and at that level, it cannot be allocated to one particular person, and therefore auctions are not feasible in that space. So basically satellite spectrums in the Ku and Ka band, which are over and above 13 gigahertz and going over and above 27 gigahertz in the Ka band, are inherently shareable in nature, and therefore it is neither desirable nor feasible to allocate them through auctions. And therefore, given that the satellite space is highly underutilized as of now, if the government fails to allocate it administratively, it would result in a potential loss to the exchequer, and it would basically put us behind in bridging the technological divide that exists as of now. And even during this year's Indian Mobile Congress that took place in September, Mr. Jyotiraditya Scindia had categorically stated that no country in the world auctions satellite spectrum space, and that everyone is allocating it administratively, and we as a country would not be doing anything different in this space.
Yeah, that's an interesting perspective. Thanks so much, Varun, for getting us those details. Of course, we're speaking at a time when Elon Musk's Starlink is making waves across the world, providing this very service. The European Union, as of yesterday, if I'm not mistaken, has announced that it is making a sizable investment, over 10 billion euro, if I'm not mistaken. I'll have to check that number exactly, to provide a counter to what is possibly being provided by Elon Musk. This is something that they intend to set up, a satellite network around the world over the course of the next 7 years or so, culminating in 2030. So some perspective on that. But it's a space that you should watch very closely. Let's go back to the questions, and we've got Ritu, who's writing in from Mumbai. She's asking about a very small stock, and I'm hoping, Asta, that you have a view. The name of the stock is Indrayani Biotech. She's bought at a price of 99 rupees. The stock is currently trading significantly below that. 3,000 shares were bought at a price of 99 rupees. Stock is currently at 37 rupees. Any chance you have a fundamental coverage on this?
Sorry, Alex, I don't have any fundamental view on this counter.
Okay.
We don't track this.
No, that's fine. Let me try and get a view from Swati then. If you incurred significant losses in something like this, first of all, what are the volumes you see in the counter, and what is the kind of strategy that you would employ?
The volumes are really very low in this particular stock. From the last, if you're looking the monthly chart from 2023, the stock is trading in a downward sloping trend line. We have seen a correction from 115 to now 37, almost at levels. But the interesting point is that the stock has already hit the oversold zone. So probably we're not likely to witness more selling pressures as long as this particular counter holds 35 levels. Upside momentum, a small pullbacks rally are definitely going to witness up to 48 to 45 levels. From there again onwards, we are witnessing some sort of a selling pressures. So short-lived momentum rallies can be chased. At the current level, I will suggest to take a more risk of 2 rupees, 35, keep a stop loss of 35 rupees. If you are getting any momentum towards to 40 to 45 levels, you can try to exit it out on every rise as such.
All right, that's the view coming in on Indrayani Bio. Well, moving on, the next query is from Vandana, who's from Karnataka. She's asking whether PC Jeweler is a good buy after the stock split done. Asta, I'll come to you for this one. The stock split was from 10 rupees to 1 rupee. So, and the stock has seen a significant up move in the past 1 year. It's been a momentum trade. But how does it look fundamentally?
Fundamentally, it's look okay to me. I find other stocks to be better than this counter, like Kalyan Jewelers, etc. So fundamentals are looking just an average to me. But my idea here is to stay invested because this sector has got a fancy, and I think going ahead also due to this wedding season which is going on, and we are seeing around us also that how the demand is penning up. I think this counter will perform stronger in the quarterly results. So idea here is to stay invested in the counter.
Okay, stay invested is the call. And yeah, all right. So hopefully, Vandana, that answers your question. Let's take the next one. And this is on OnMobile Global as well as Nazara Tech Delta Corp. Basically, a question on OnMobile Global though. It's a question from Mr. D. Mazumdar, who's writing in from Rourkela in Odisha. He's bought at levels of 135 and he's been holding for 2 years. He's asking if he should sell, hold or average at the current market price, which is he's incurring a loss at this juncture. On the fundamentals, Asta, what's the view here?
Because the company itself has shown the losses in their quarterly results. That's why the stock is not able to perform any, in any ways. But I think going ahead, since the result season is on, I mean, by 12th or 13th of January, we will start seeing the results. So better to stay invested rather than booking losses at the current moment of a time. Because if some positivity comes in the result, definitely this counter will take a strong move. So remain invested into the counter.
All right, so that's a view. We've hit the last leg of Ask Profit, and you know what that means if you've tuned in for some time. We hit the rapid fire segment, which means we try and take as many questions over the course of the next 2 minutes. Asta and Swati, do try and keep your answers as short as you possibly can. Funny from Hyderabad, this is the first question asking about Reliance Power and Punjab National Bank. You can choose one of these two or none. Asta, on the fundamentals, which would you buy?
Punjab National Bank, definitely on the back of a strong financial performance being ahead also.
All right, EFC Limited is the next counter. Mohan from Hyderabad wants a 2 months view on this particular counter. Swati, your view on this counter?
My view is definitely positive upside. I'm looking for a target of at least 6,000 levels on the higher side. So you can hold on the long position at the current market price.
Okay, I just want to clarify. You're talking about PFC?
Sorry, I was talking about BSC. About the PFC, the view is a bit cautious, Alex. Thank you so much for correcting me.
No, in fact, it is
EFC,
not. Neither of those. It's EFC. E for Elephant FC. EFC Limited.
Acha, EFC.
That's right.
Yeah.
The view is a bit cautious on this particular stock. As of now, we are witnessing that the stock is trading in the very sideways momentum. Currently, it's 700 is the levels. As long as it's hold about 680 levels, you can hold your long position. I'm looking for a upside momentum towards to 720.
Okay. Is it a good idea to buy Mazgon Dock Shipbuilders? Rajesh from Bengaluru wants to know on the fundamentals. Asta?
Yes, 5,500 is the price target which we are giving to this counter.
All right, Titan is the next counter, bought at 3,488 a piece. Should the person keep holding it or quit? Asta, your view on this counter?
Keep holding this counter. Price target can be set at around 3,700.
Okay. Okay, Crescenda Rail Solutions. I'm not sure if you're going to have a view on this one. Asta, any chance?
I'm sorry, Alex, I don't track this.
Okay,
counter.
Swati, any chance you have a view? Average price is 18.5 rupees. I'm not sure what it is right now. Would you suggest holding on?
Suggest to hold on as long as it sustains 17.50 levels up to that level. Keeping us that stop loss, can hold on. Any pullback rally towards 220 should be exit your long position.
Okay.
All right, Bank of Baroda is the next counter. Ishant Arora is holding 2,500 shares, bought at 261 a piece. Should he hold, sell, or what could be the next target? Swati, your view?
You can definitely hold on. This particular counter is on the verge of building the formation of head and shoulder. Upside can be seen up to 265 to 280 levels. So hold on by maintaining a strict stop loss of 250.
Okay, I do want to point out at the end of this program, there are a few small stocks that we've spoken about at the end, and we may not have been able to give you a very clear view. I would encourage you to tune in tomorrow, perhaps ask your question again, and we will delve a little deeper where possible before you take a call. Asta and Swati, thanks so much for joining in, for answering all the questions that you did. Always a pleasure having you on the program. And that brings us to the end of this edition of Ask Profit. Up next is Know Your Company, and we've got a great one lined up for you, so do stay tuned. This is NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy.
All commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you are trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you are trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters?
Hello and welcome. This is KYC on NDTV Profit. I am Agam Vakil. Well, in a world where we are bombarded with so much more information, well, we thought that it would always be a good idea to perhaps get you a deeper and cleaner and perhaps a simpler version of the companies that we want to present to you, give you a better idea in terms of what these companies do, how they have performed, what this could potentially look like down the line, and further perhaps even get clarifications from the management. And this certainly could be perhaps a little bit more actionable in times when we have so much data to work with. Well, on KYC, that is Know Your Company, we have Ugro Capital. And well, to tell you a little bit more about Ugro Capital, it's a NBFC, that's a non-banking financial company, and what it does do, that it's technology based at the moment, so there is a little bit more focus when it comes to tech. But in terms of the various areas that it lends to, well, about a third of its lending comes from small businesses, and another third comes from secured loans. That's followed by 10% of its loan mix coming in from MSME loans as well. Moving on to the other segments, well, we also have plenty coming in from supply chain, machinery loans, as well as partnership. But this is as far as what the company does. Well, every single quarter, every episode, pardon me, what we actually give you through and take you through is a handful of parameters which could give you a better idea on how the company's performed in the past. And among the many factors that we do consider, in fact, well, we are taking into consideration, well, the income statement, the balance sheet check, the operational metrics, as well as asset quality. And among other parameters that we do consider shareholding, street coverage, street credentials, as well as valuations. But to take us through all of this as well, I also have with me Harsh Saita, my colleague, who could perhaps shed a little bit more light in terms of how the company has done so far. So Harsh, thanks for joining in. Let's start with just the income and the kind of growth that we've seen for the company going forward.
Well, growth has been extremely strong, Agam, as you can well see. First off, on a lower base, but the net interest income, which is the NII growth, on a year-on-year basis, FY24 numbers is what we look at for now, has grown at 40% YOY in FY24. It continues to grow at a very similar kind of clip even in FY25, but the 3-year CAGR is what really impresses me. Top line has literally grown 37% YOY over the last 3-year period, which is extremely strong. But the key metric here is whether that is actually translating to profitability, right, Agam?
Right.
And that could be impacted by provisions, and that's what we look at before we look at the PAT number. The provisions number at around 116 crore in FY24 on an asset base of 9,000 crore is fairly reasonable. But you've come out of a good cycle, so that's something we'll need to keep in mind. And the 3-year CAGR with regard to provisions is 81%, but again, the base is low over there, and the YOY growth is around 105%. So it's doubled YOY, but again, off a very low base.
Right.
Therefore, let's look at the profit after tax at 119 crore for a 2,000 crore odd market cap company, and I'm talking FY24 numbers. The YOY growth has been 200%, so very sharp rise in profitability. And the 3-year CAGR as well is 61%, so very healthy compounding in terms of profit with regard to the way in which income is shaping up, and the provisions have not really, gone out of hand, if I can call it. That's how it's essentially playing out on the income statement. Definitely a thumbs up for me here.
Okay, so that's as far as the income statement is concerned, and of course this is to a certain extent a function of its AUM growth as well. So let's take a look at how its assets under management have also grown over the past many years. And what you can see is on a year-on-year basis, we've seen its AUM grow by nearly 50%, and over three-year CAGR, it's a staggering 90%. So in terms of all these metrics, well, it's panning out that we saw in the income statement. It's to a certain extent with respect to the kind of AUM that's been. But I just want to point out that as on FY24, its AUM was 9,000 crores. And as of now, it does seem like the number has moved above the mark of 10,000 crores. So it's certainly going to be a thumbs up here as well. But what's next on our radar is operational metrics, Harsh.
Right. Let's go to operational, because this is where all of the numbers will start stacking up as to how profitability is coming about. Look at the yields, okay? They've moved from 14% to a higher number of 17%, given that we saw rate hikes. And thereafter, it settled in at around 16.5%. So currently, FY24, FY25, roughly that's the kind of number that we're settling in at. Cost of funds is concerned, extremely stable despite all the rate hikes. So that's something that we'll have to look out for, and we'll probably ask the management as well as to why this is so. Why our cost of funds, and what's really giving that stability to cost of funds. Last off, with regard to your ROA number, it's gone from 0.6% to 1.1% to 2.3%. Now the key here is they've guided Agam to a 4% ROA. How quickly do we get there? And of course, you can see the kind of journey, the speed at which the ROA is doubling. It's almost doubling every year.
Right.
How quickly can we go from 2.3 to 3 and from 3 to 4 is what I would be really curious to understand. But just given the trajectory of the ROA, it's on an increasing trend. That's a positive. But at the moment, a 2.3% ROA for a business which lends to small, medium enterprises with high risk, well, that's something that one would have to really keep a lid or a watch on as to how that number really evolves. And that's why I'm giving this a bit of a neutral, given the way in which these numbers are panning out.
Fair enough.
We'll have to wait and watch. If that ROA number goes to 4, the re-rating could be fairly quick on this one.
Right. Okay, so talking about risks, and it's interesting that you pointed out that because it's, the company lends to relatively smaller businesses, the risk is certainly high. And based on that, its gross NPA and net NPA ratios seem to be very much in check. In fact, over the course of the 2 years, they have actually come off. So if you consider the FY24 gross NPA ratio, that's come down to 2% as against 2.3%. Sure, fair enough. On a year-on-year basis, we've seen an increase there as well. And when it comes to the net NPA ratio, again, it's a similar picture. An increase on a year-on-year basis as compared to FY23, but certainly a vast improvement as compared to FY22. So given the fact that in the long run, we have seen an improvement, a decline in your gross NPA and net NPA ratios, well, I would give this a thumbs up as well. Now let's talk about, well, the shareholding as well, Harsh.
Yeah, well, so for shareholding, the promoters currently own just 2.2%. A large part of that, or pretty much all of that dilution has happened because it's a lending company. It needs to continuously raise equity capital. and that's likely the reason why the promoter ownership is this low, and you will only expect this to get lower. Again, for context, we'll probably ask management a question on that as well, try and get perspective. But look at where the institutional investors are sitting. They're sitting on a healthy 25% or so in terms of holding, and that's remained largely stable on a sequential basis. Your public holds, so there's a very large free float which is currently sitting with institutional investors and public, obviously, given that promoter ownership is so low. So that's probably just the one piece which could be a concern, that whether promoters have enough skin in the game, because that's generally the metric we look at when we're looking at shareholding, but also understand it's a lending business. So you're going to have equity dilution at all points of time.
Right. Fair enough, and point taken there as well. So with that, let's also take a look at what the street is making of this particular stock. So firstly, we must remember that this is not a very large company. It has a market cap of a little over 2,000 crores. And yet you still have about 7 analysts on the street covering this company. It's not very often that something like this happens for a company this size. But all analysts on the street currently have a buy rating, as in they are positive on the company, and more importantly, with the kind of price target that they put in terms of consensus, that comes in at a little around 362. That implies a over 50% return from current market levels. So that certainly is a big positive, given the kind of credentials that the company has, and based on that, we are certainly giving it a thumbs up. And you know what? I believe that it's not done too badly either since its listing, Harsh.
Yeah, it's not. It's actually doubled up since listing. Yeah. And therefore it's given, or rather since 2021, since it's listed on the National Stock Exchange. And in its new avatar since 2018 as well, it's done fairly well for itself. But let's take August 2021 as the metric, because that's when it actually listed on the NSE. Last 12 months, it's given a negative 12% return. And we saw some of the profit numbers that the company has clocked over at least FY24, and therefore the kind of growth that it has seen versus the kind of return it has given, not really commensurate, right? So a large part of that doubling has happened, especially in the first 2 years, between August 21 and August 2023. Right. Now, let's talk about the last 1 month. It's down 25% from the high fair, but in the last 1 month, it's given a 6% return. So is the stock coming back in vogue? Well, that's questionable. But overall, when you're looking at the 3-year chart, and generally at KYC, we look at the longer term, it's done fairly well for itself. It's
absolutely. Doubled. Well, any stock which has doubled over the course of the 3 years certainly is giving you a reasonable amount of returns. But let's talk about valuations as well, because that's something that we usually touch upon. And in terms of that, compared to some of its peers on the street right now, as you can see, and in this case, we're taking price to book ratios and not necessarily price to earnings. Ugro Capital currently at around 1.1 times, as against something like Capri Global at 4 times, Credit Access Grameen at 2 times. It's the same for Mass Financial. So it's certainly going at a discount as compared to some of the other peers, especially given the kind of growth that the company has seen. So it does seem like it's going at a discount, which is why for this particular aspect as well, we're going to give it a thumbs up for the company. But that comes down to the kind of rating that we have. So let's take all these parameters together and see what kind of rating this totaled up to. So as far as the KYC rating for this particular company is concerned, that comes to, in terms of the income statement, the balance sheet check, operational metrics, and asset quality, it's about 3.5 out of 4. And among the next set of parameters, again, good for street coverage, street care, and valuation. So another 3.5 out of 4. That brings the total to around 7 out of 8. So certainly, a good rating as far as KYC is concerned. So that's the overall rating that we have with respect to what the company has done in terms of fundamentals, as well as the kind of expectations from the street going forward, keeping valuations in mind. But from there on, we very quickly talk about your SWOT analysis. And I'm going to talk about strengths and weaknesses as far as Ugro Capital is concerned. So firstly, when it comes to strengths, it's an extremely fast growth company, and that certainly plays in favor of the company. And it's maintained its asset quality, more importantly, especially given the kind of segment that it caters to. The weakness perhaps would be return ratios, which at least the street is saying that they need to be just need to strengthen a little. And the MSME segment is a tough segment to deal with. Sure, the company has done well so far, but it is something that could see a lot of volatility. It's not necessarily company specific, it's industry specific. But Harsh, let's talk about opportunities and threats as well.
Well, huge opportunity, Agam. The company currently has an AUM of roughly 10,000 crore.
Right.
The size of the market currently is 25 lakh crore plus. In fact, the unaddressed market, some reports suggest, are at 25 lakh crore. So the kind of opportunity size available and the sector in which they deal with, the opportunity size is extremely large. And again, would be great to take perspective from the management here on how they plan to tap in and how much of that they plan to tap in incrementally.
Right.
Second one, with regard to operational efficiency, a lot of that is still yet to fully kick in. We saw how ROA ratios have gone from 0.6% to 1.1% to 2.3%. So you've got an increasing, you have a doubling trend with regard to ROAs. Can that sustain?
Right.
Well, that's a strength because as operational efficiency kicks in, ROAs will continue to improve likely.
Right.
But there are threats as well. If growth slows down in the sector as a whole, you're likely going to start to see a low base, a smaller company with an AUM of 10,000 crore grow at a lower clip. Is that so or not? Well, again, we'll try and venture a question. And second piece is with regard to the cyclicality and asset quality.
Right.
These, the MSME cycle, if that were to kick in, how much does that affect someone like a Ugro, smaller player, tech-enabled, uses AI for lending? Can they really substantiate the kind of growth that they are getting with asset quality? Well, that's a question, but it's a threat as well. So
okay. Fair enough, fair enough. So there you have it. That's an overall comprehensive view on what the company has done. But you know what? There's no better time to actually talk to the management of the company than now that we've discussed all these parameters. So in fact, we have with us right now on the studio, Mr. Shachindra Nath. He's the founder and managing director at Ugro Capital, who joins us to take on questions that we have for him in terms of prospects going forward. But with that, I'm also going to hand it over to Harsh. Take it away.
Well, thanks for that, Agam. First off, good morning, Mr. Nath. Great having you here, in person. Thanks for taking out time and coming here.
My pleasure.
So first off, I want to understand, with regard to the addressable market itself. I was just speaking, and probably you had a chance to listen. 25 lakh crore is the kind of market size. Are you going to target certain pockets? And how are you going to maintain asset quality comfort while you are lending and growing at such a fast pace?
Yeah, this can be answered in many ways. I think so. Challenge is when you talk to an anchor who's a chartered accountant and a karate black belt, then you only talk about numbers, right? But actually, you have to look much beyond
He's done his research and come.
Yeah. So actually, it's much beyond that. If you look at India as a country today, I keep saying that India actually is dependent on small businesses. I keep saying that if you look at the political structure, there are multiple types of polarization in India has happened. Finally, we are reaching to economic polarization, which means you need to provide jobs to the people, irrespective of what kind of spectrum of political dimension you are. Right. Whether you are left, right, or center, it doesn't matter. The job have to be created because people have to be fed. And in India, the only, after agriculture or probably equal to agriculture, the only sector which is providing jobs is MSME. And the credit is related to that. India, if it has to reach actually the 2047 target of to be a developed nation, MSME has to contribute almost 50 to 60% of GDP. We today employ roughly around 17, 18 crores in MSME. It has to go down to almost 25 odd crore. We run a campaign called MSME Achha because the problem or the challenge, I was listening to your commentary, problem or challenge is we continue to believe that MSME is a weak segment. This is a 5 or 10 years past trend. One of the ways to think about a bank and a non-bank, there was a point of time when consumer financing was not there. I keep giving this example that my father, when he has to buy a scooter, he has to wait for 6 years and he has to save money to buy that scooter, right? There was a point in time when gold was, lying in people's locker and it was not a, monetizable asset for credit purposes. So as tractor finance and others. whenever a player who focuses on certain segment on some broad metrics, you will see size and scale, especially for something where governments are focusing. If you look at last budget speech, the amount of focus government has put on MSME as a segment and series of things which has happened from 2014, combined with a massive data infrastructure, there are three big changes in India has happened. A behavioral change. Post demonetization, small businesses which were largely in kacha economy have realized that paisa unse nikala ja sakta hai, and that they started converting to more or less pakka economy. Second, the credit assessment methodology, which was predominantly very physical, you have to assess non-reported income. Post the establishment of GST, digitization of banking and bureau is becoming more and more formal. And third, the segment of the market which is growing the strongest, which is the Bharat segment, we call it 15 lakh se 15 crore turnover ka customer segment, is actually MSME acha hai. And you said 25 lakh crore of unmet demand, actually it is somewhere between 70 to 80 lakh crore.
Okay.
And almost 90% of that is for 15 lakh to 15 crore segment. Ugro focuses on that segment. It's hard to build. What we have achieved in 3 years, what people have achieved in 15 years. There is no comparable. Public market actually doesn't reward us for that. Right. But there is no comparable in India that our journey started technically in 2019 and we suffered from COVID in 2020 and then we restarted in 2022. In 2020 and we were only 850 odd crore. Right. And we are now touching more than 10,000 odd crore. So in 3 years time, somebody to build in a scale of 10,000 odd crore, have large global investors, 60 plus lenders, almost every DFI in the world, and holding the portfolio quality. Some bit of is our work, but more of it is the ecosystem around MSME financing is changing, and not Ugro. You will see in next 4, 5, 7 years, very large financial institution around MSME would emerge, and we are hoping we would be one of them.
Sure. Mr. Nath, my question is to do with asset quality, and you guys have been able to maintain a very good asset quality, especially given the kind of segment that you guys cater in. But there is some expectation, some anticipation that things could potentially turn at least slightly for the worse. Your anticipation in this case and how you potentially look to tackle this?
Yeah. No, look, I think so there are, analyst fraternity actually look at NBFC or the credit market in one uniform way. Yeah. Actually, that is not true. What is happening to consumption market, what is happening to say microfinance industry, what would happen to affordable housing finance industry may not necessarily translate to small business financing. Small business financing is directly linked to overall economic growth, right? And within that also you have to look at what we call 50 crore and above turnover businesses and small retail businesses. As long India's consumption economy is growing, people are buying goods, they are going to stores, they are consuming in local market, we think so that the small business economy will remain resilient. Right. Now, only thing what you have to be very careful is how do you assess. So the critical key, we say in lending there are three things: the intent of the customer, his eligibility and his ability to repay. Now, ability to repay is what is the most critical. Sure. And within cycles, you have to readjust that. Right. We follow, while we invested very heavily on data analytics plus technology, but we follow one simple principle of what we call yield to loss ratio curve. Right. More expensive you are a lender, more potential of losses and more variability in your credit cost. Right. So you have to build your portfolio from a very low yield. So our ROAs looks more depressed than vis-a-vis some of our other peers said, because we follow a very long-term approach, saying that 70% of our portfolio have to be secured, almost 50% of that has to be at 12.5% yield. We are increasing our branch network for high yield business very, very rapidly, so very heavy OPEX is going on that. Right. But ultimately we say that we have to be in a median yield band of say 16, 17 odd %. We have to gradually increase our yield so that we can control the credit costs and we don't become greedy to do every business in high yield segment. Right. Because in short tenor you can be very, very profitable, but you don't want to be like a microfinance company that which every 2 years then you have to take losses, because ultimately we are fiduciary to both shareholders and lender, and you have to be true to that.
Yeah. Fair point. So you've guided for a 4% ROA. Two questions here. One, how quickly do you get there? Two, what kind of credit cost do you build in to get to a 4%?
Yeah. So look, why 4%, right? So we continue to believe that as a company, like banks, I heard you saying that the promoter holding is not so much of positive. Financial services, India is actually a little odd. There is all the banks in India, technically they have no promoters. But market is overweighted for NBFC, some of them which are actually bigger than the banks, but all of you like some big promoter to be there, right? It should not be the case actually. So actually in lending market, because it's a systematic risk to the final ecosystem, if you follow the principle, the ownership should be restricted in a bank, so should be the case of the NBFC itself, right? Sure. And actually for a professional, turning entrepreneur to build size and scale, you cannot have ownership unless you decide to take out the money from your own company and start putting in the equity itself. Right?
Fully hear you, fully appreciate.
Yeah, so that is one point of that. Second, we have to get to a certain best lending companies or financial services company have to be consistent. And why investors or institutions or market would like it, once you get to a certain level of return on equity and return on asset, certain percentage of growth, and you show consistency. Some of the best banks in India, till the time they are best one, they showed consistency. And what it means, you grow at 25%, you cannot grow at 50, 70%. We grew because of our lower base. You deliver at least 3 to 4% return on asset. Now, return on equity is purely a function of leverage. Right. So, large corporate-owned NBFC get the benefit of leverage, and that's why their return on equity is very significant. Sure. For somebody like us, leverage is kind of impossible, but we have found a way to offset that by creating an off-balance sheet business. Yeah. So, our weight and approach to get to 4% is to continuously increase our branch footprint. So we were 25 branches in 2021, we went to 75. Last year we were comfortable at the what we call the micro enterprises business, which is small ticket size, 9 to 15 lakh rupees secured ticket loan. Yeah. And then we started investing very, very heavily. Right. We are at around 250 odd location. We should be at 400 location. Today, our micro enterprise business, as of September, roughly around 11 odd %. We are hoping that would become 35 odd % by 2026. Okay. That portfolio is at an yield of around 19 odd %. Yeah. It would come down to 18 odd %. But the sheer contribution of that business going up would increase the ROA. But actually, investors, other than the long-term patient investor, public market investors, what I've learned in last 3-4 years, don't have patience for 8 quarters, 10 quarters or 15 quarters. Right. Everything is judged basis 1 quarter. For a company which is opening 50 odd location in every quarter, a company which is adding 1,000 plus people to increase this branch. So your operational efficiency is a function of time when you mature. Right. We are hopeful that we show consistent performance on these metrics. At some point of time, investors would start liking it. Sure. Because this is the same market where investors also sometimes like companies which have no profitability, which have only gross revenue but no bottom line, and people lap it up very, very quickly. Versus a company which is doing some fundamental businesses. Fair enough, sir. Point taken. And Mr. Nath, we will lead at that. Thank you so much for joining us and giving us so much more insight into the company and what we can expect going forward. Unfortunately, this conversation has been enough. There were plenty more questions that we had for you, but that is all the time that we have. Some other time for sure. Absolutely. We look forward to having you again on NDTV Profit. But on that note, it is a wrap on this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past. and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the
Hello and welcome to NDTV Profit. You're watching Hot Money. I'm Hiral Datia and with me is Anushi Vakaria. Anushi, good afternoon. Clearly, let's quickly pull up the markets and see what's happening. You are seeing pressure that is building in. We are below the 24,400 mark already with cuts of almost 1.2% coming in terms of Nifty 50. You have the rupee also, which is at a record low at 84.992. That's the number that we've been tracking so far. But let's pull up Bank Nifty with that and see what's happening in terms of Bank Nifty as well, because the pressure is again building up. There you go, 1.4%, little over 700 points is the kind of cuts that we're seeing with regards to Bank Nifty as well. If we can have the sectoral indices to see where is the pressure coming in from, because IT seems to be in a phase of consolidation. Real estate continues the uptrend for a second or a third consecutive day, 0.9% higher. FMCG is interestingly seeing some positive momentum in today's session. Apart from Bank Nifty, you have the private bank as well as the PSU banking space, which is down in trade. You have Nifty Infra, which is trading under pressure. Energy is seeing cuts of almost 1.3%. Oil and gas is up, out and about. Metals is also trading under pressure. Auto cuts of almost 0.9% coming in there. So that's with regards to where, sectors are concerned. But let's see what the advanced decline ratio is looking like. If you see in terms of Nifty 50, 45 declines versus 5 advances. And there you go, you have almost double the advances in terms of the declines on NSE. In terms of stock-specific action, what's putting pressure? Shriram Finance, cuts of almost 4% coming in there. Bharti Airtel, Grasim, Power Grid, as well as TCS. These are the top losers coming in terms of today's session. Whereas on the gaining end, you have a Cipla, which is up in trade, and this is on the back of a brokerage note that has come in. ITC is up in trade, Adani Ports, Apollo Hospitals, as well as the Tata Motors. These are few of the top gainers coming in from the large cap space. Overall, Anushi, if you see in terms of broader markets as well, how is it as compared to benchmark indices? Because a couple of trading sessions now become absolutely crucial. You are seeing a lot of stock-specific action as well that's happening in the markets.
Absolutely, Hira. Now, while you've talked about, given a broad sense on what is happening in the benchmark indices, which were down about 1%, we are seeing this broader markets in comparison are faring better while they are in red. Both of them seeing about 0.28% or 0.14% of gains. That's what I'm talking about, the mid cap 150 and small cap 250. Let's see what is bringing down this index and what are also some of the stocks which are buzzing despite the market weakness that we are looking at. So we are looking at counters like Patanjali Food, L&T Finance, Nippon Life, Bandhan Bank, LIC Housing, Indian Bank, Bank of India. Couple of names from the banking side we are seeing down in pressure today. We are seeing about 2 to 3% of cuts in today's trading session. While if you are to look in the mid-cap space in terms of gains, Suzlon, this is up over 4% in trade today, while the real estate stocks are buzzing in trade. You talked about how Nifty Realty is up over 1% in trade. Oberoi Realty continues on its strong momentum. Even yesterday, it was up in trade after we saw Axis Capital initiating a buy call on this stock. Today, we are seeing about 3% of gains in Oberoi Realty as well as Macrotech, about 3% of gains over here. PB Fintech, another counter wherein we are seeing about 2.5% of gains, which is followed by Prestige, another stock in the real estate space. Global Health, PTM, Dr. Lal Path, some of the stocks seeing about 2% of gains. Now, coming to Nifty Small Cap 250, we are seeing about 0.13% of a decline over here. And let's see which are the stocks which are dragging down the index. We have stocks like Blue Star, Jindal Saw, Gujarat